Hello everyone, welcome back to Crypto Partner Club. I am Mauro, former investment banker, and today we are analyzing Solana, one of the most relevant cryptocurrencies for finance. In this video, you're going to get three things. First, why Solana often benchmarked against Ethereum. Second, three bearish themes and three bullish themes for Solana. And third, three specific price scenarios for the next 12 to 18 months. By the end, you'll be able to take a view on whether Solana can revert $250 again soon, or if it is just another overhyped crypto asset that will crash again. So let's dive in. Solana is currently trading at around $90. That's nearly 65% down from its peak of $250, reached 4 times in the past, most recently in September 2025, and for the first time back in 2021. From a trading standpoint, Solana is underperforming Ethereum. In the last 12 months, Ethereum is up 7.5%, while Solana is down 33%. But here's what people are missing. While price is down and it is underperforming Ethereum, its network activity is telling another story. In fact, in the last 30 days, Solana processed 35 times more transactions than Ethereum on a hourly basis. In addition, its maximum transaction level per second, which shows how Solana can handle peaks of activities, is 84 times Ethereum's max transaction per second, and the maximum capacity is 273 times in favor of Solana, showing how much more scalable Solana is than Ethereum. This impressive technical performance explains why Solana is the darling of investment banks and Wall Street. Speed of execution and scalability are considered in finance key features to move on-chain securities trading. It appears that Solana has been identified as the partner of choice should this shift on-chain accelerate. In addition, there is another important advantage for Solana versus Ethereum. It is the transaction fees. I have covered this topic in my video on Ethereum and explained how important this metric is. The average Ethereum transaction fee is about 12 cents on the dollar, driven down by layer 2s, while on Solana's fees are as low as 0.2 cents on the dollar, which is like 2% of Ethereum fees. This is an incredible feature of Solana. Fees are critical for scalability in mainstream finance, and Solana is positioning itself as having clear advantage over Ethereum in this respect. In terms of institutional adoption, Ethereum's market cap is in the region of $250 billion, while Solana's market cap is about $50 billion, so Ethereum is 5 times larger. Ethereum ETFs had inflows close to $12 billion in total from the beginning when they were launched, while Solana had inflows under $1 billion. However, Solana ETFs only launched in October 2025 and since then have been growing consistently. Also, importantly, they offer staking to investors, so they offer yield, which is a profit for holding Solana. And this is why 50% of Solana ETF holdings are institutional capital. So backing Solana for its potential to capture growth in DeFi and payments and for producing yield to investors. There is lots of data about how Solana is gaining ground over Ethereum in DeFi, with a steady increase in total value locked and therefore eating up market share from Ethereum. Before we continue, if you're finding this analysis helpful, please hit that subscribe button. I post weekly videos around crypto assets seen through the traditional lenses of finance. No hype, no paid promotions, just fundamentals. Now, let me give you the bear case on Solana, because intellectual honesty requires presenting always both sides. Bearish risk number 1, network reliability concerns. Solana has experienced multiple network outages in the past. Between 2021 and 2023, the network went down several times during high load periods. The good news is that in 2025, Solana achieved 100% uptime. There was also a recent network upgrade called Firedancer that was done to improve reliability further. From a risk perspective, institutions remember those outages. If Solana goes down again during a critical period, its reputation may be compromised. Bearish risk number 2, competing layer 1 blockchain. Solana isn't the only high-speed blockchain. There's Avalanche, Aptos, and others that offer fast, cheap transactions. If these competing blockchains gain traction, Solana's network effect erodes. Right now, Solana has momentum, but momentum can shift. Bearish risk number 3, regulatory uncertainty. Solana's architecture, which relies on a smaller, high-performance validator set compared to networks like Bitcoin, and this has led to questions regarding its decentralization and potentially could expose Solana to different regulatory requirements. And now the bull case, 3 reasons Solana could massively outperform from here. Bullish Catalyst 1, payments infrastructure dominance. Visa, PayPal, Western Union, and Stripe are all running production payment workflows on Solana. This is not a pilot program, this is live infrastructure. If Solana becomes the global rails for stablecoin payments, fee revenue explodes. Currently, Solana generates around $3 billion in annual revenue, but if payment volumes grow 10 times or 100 times, the revenues will balloon. Bullish catalyst number 2, institutional ETF inflows. If institutions start allocating capital to Solana ETFs for yield plus upside, inflows will accelerate. Bitwise analysts project institutional demand could exceed new SOL issuance by 20 to 50% in 2026, and inflows could go to $3.5 to $4.5 billion. So if institutional demand exceeds supply, what happens is price rises. This is basic economics. Bullish catalyst number 3, network effect acceleration. Solana now has twice as many daily active users as Ethereum. This is a network effect compounding. More users, more developers, more applications, and then more users again. If this cycle continues, Solana captures market share from Ethereum. Let me give you 3 price scenarios for Solana over the next 12 to 18 months. Scenario 1, downside case, $50 to $70. In this scenario, Solana experiences another network outage. Institutional confidence collapses, ETF outflows accelerate, competing layer 1 blockchains gain market share, and Solana price drops. Scenario 2, base case, $80 to $150. In this scenario, Solana maintains 100% uptime. Institutional adoption continues. Payment infrastructure grows modestly, and DeFi total value locked doubles. And scenario 3, the upside case, $150 to $300 in the next 12 to 18 months. In this scenario, institutional ETF inflows surge. Visa, PayPal, Western Union scale payment volumes. DeFi total value locked grows to $30 billion. Solana captures significant market share from Ethereum. So here's my verdict. Solana is undervalued relative to its network activity. In investment banking, we define Solana as having a clear structural competitive advantage. When you can process transactions 30 times faster and 100 times cheaper, you win on micropayments, high-frequency trading, payment infrastructure. The institutional adoption is real. Goldman Sachs, BlackRock, Morgan Stanley, these are not retail speculators. They are betting hundreds of millions on Solana infrastructure. The risk is network reliability. If Solana goes down again, institutional capital leaves. But the 100% uptime we saw in 2025 and the Firedancer upgrade suggest that the problem is solved. From a traditional finance perspective, Solana is a high beta play on blockchain adoption. You're betting on payment infrastructure, institutional ETF flows, and DeFi growth, and picking Solana is the winning catalyst in these emerging businesses. Quick disclaimer, this video is for informational and educational purposes only. It is not for financial advice. If you need personal financial advice, please consult a qualified financial advisor. And remember that when investing, capital is at risk. If you found this analysis helpful, hit subscribe. I post weekly videos on crypto analyzed through traditional finance frameworks. No hype, no paid promotions, just fundamentals. See you at the next one.